Meet Ethan. Ethan is smart. He's a managing director at his firm, he's saved diligently, and he's fascinated by wealth. And he, like most of us, believes that when you get truly rich, the first thing you do is buy a private jet. He pictures it clearly. A sleek Gulfstream G700 on the tarmac, a deal closed with a firm handshake, and the keys to the kingdom handed over. He imagines the freedom, the power, the ultimate symbol that you've finally made it. He couldn't be more wrong. That jet he's dreaming of isn't a symbol of freedom. For the truly savvy, it's a financial trap. Now sure, some of the ultra-rich do own their jets outright, but the smartest players in the game know better. In this video, we're going to follow Ethan on a journey to uncover the secret financial strategies the ultra-wealthy use to fly private. We'll deconstruct the myth of ownership and reveal a hidden world of complex, sophisticated financial tools that are far more powerful than simply buying a plane. By the end, you'll understand why, for the world's financial elite, owning a jet is often the last thing they want to do. Number 1. The myth and the $1 million handshake. Let's stay with Ethan's dream for a moment because it's a powerful one. It's the myth that fuels countless movies, songs, and aspirations. The idea is simple. Wealth equals ownership. When your net worth crosses a certain threshold, you graduate to a new level of consumption. You don't just fly first class anymore, you buy the entire plane. And what a plane to buy. Take the magnificent Gulfstream G700. With a sticker price that starts in the mid to high $70 million range, it's a flying masterpiece. It can carry up to 19 passengers and has a range that can connect continents, flying nonstop from New York to just outside of Singapore. Or consider its rival, the Bombardier Global 7500, another titan of the skies with a similar price tag, often customized to well north of $80 million. In Ethan's mind, the transaction is cinematic. A briefcase of cash is exchanged, or more realistically, a wire transfer is confirmed, and suddenly, the world is different. You have a tail number that belongs to you. You have a crew on your payroll. You can fly anywhere, anytime. This isn't just travel. It's a declaration. It's the physical manifestation of success, an asset that says you operate on a different plane of existence, both literally and figuratively. This belief is rooted in a middle-class understanding of wealth. It's the same logic that says, if I win the lottery, I'll buy a mansion and a Ferrari. You work hard, you accumulate capital, and you exchange that capital for tangible, high-status objects. Ownership is the endgame. But as Ethan is about to discover, this is precisely the kind of thinking that keeps people from ever reaching the next level. The ultra-wealthy aren't playing the same game. They've rewritten the rules. Number 2. The harsh reality. The owner's trap. The first crack in Ethan's dream appears with a single, brutal concept: depreciation. Buying a brand new private jet is a lot like driving a luxury car off the lot, but on an exponentially more devastating scale. A new ultra-long-range jet can lose up to 15 to 20% of its value in the first year alone. On a $75 million G700, that's a paper loss of over $11 million before you've even completed your first few international trips. But depreciation is just the silent killer. The loud, cash-devouring monster is the ongoing cost of ownership. This is what the industry calls the owner's trap, and the numbers are staggering. The purchase price is just the ticket to entry. For a large long-range jet like a G700, the annual cost to operate it can run between $3 million and $5 million, or even more. Let's break down this financial vortex. First, you need a place to park it. You can't just leave a $75 million asset on the street. You need a hangar. Depending on the airport, renting can cost anywhere from $3,000 to over $16,000 a month, and that's before you get to major hubs like New York or London, where costs can be substantially higher. Next, you need a crew. A jet like a Global 7500 requires at least 2 highly trained pilots, and often flight attendants as well. A senior private jet pilot can command a salary between $150,000 and $300,000 per year. For a full crew, you're looking at an annual payroll of $200,000 to $500,000, not including mandatory recurrent training, which can add another $30,000 to $80,000. Then there's insurance. This is a non-negotiable six-figure expense. Annual premiums can range from $30,000 to as much as $500,000, depending on the aircraft's value and how it's used. But the biggest and most terrifying line item is maintenance. Aviation is an industry built on safety, and that safety is paid for with relentless, expensive maintenance. Annual maintenance costs can range from $500,000 to over $4 million, depending on the jet's age, size, and usage. A simple tire replacement can cost thousands. A full engine overhaul, required after a certain number of flight hours, can easily cost over $1 million, and we haven't even mentioned the fuel. A large jet can burn through fuel at a cost of over $2,700 per hour. Fly 250 hours a year, a reasonable amount for an owner, and you've spent nearly $700,000 just on fuel. Suddenly, Ethan's dream of freedom looks more like a prison of fixed costs. His $75 million asset is actually a voracious liability, a new business he has to manage, staff, and feed with a constant stream of cash, whether it's flying or not. He's learning the first secret of the ultra-wealthy. They don't want to own a depreciating, cash-burning machine. They just want the benefit it provides, the ability to be anywhere, anytime. So if owning is a trap, how do they do it? Number 3, the first revelation. The Uber for billionaires. Ethan's journey into the real world of private aviation begins with the simplest and most flexible alternative to ownership: on-demand chartering. Think of it as the Uber for billionaires. When you charter a jet, you aren't buying the plane. You're just renting it for a specific trip. You pay for the hours you fly, and that's it. No crew salaries, no hangar fees, no multi-million-dollar maintenance bills. Need to get from New York to London? You call a charter broker, they find an available aircraft, and you get a quote. For that one trip, an ultra-long-range jet could cost between $180,000 and $250,000. When you land, your financial obligation is over. This model offers incredible freedom. You can choose the perfect aircraft for each mission. A small jet for a quick regional hop. You got it. A heavy jet for a transatlantic journey with the whole team. No problem. You're not tied to a single plane that might be too big for some trips and too small for others. This is the entry point for many who fly private, and it's perfect for those who fly less than 100 hours a year. It provides all the convenience, private terminals, custom scheduling, in-flight privacy, without any of the crippling long-term commitments of ownership. It's pure, unadulterated access. However, chartering has its trade-offs. Prices can fluctuate wildly with demand, fuel costs, and availability. During peak seasons, the rates can be exorbitant, and there can be inconsistencies in the quality of the aircraft and crew, since you might be using a different operator for each flight. For Ethan, this is a major mindset shift. He's starting to see that the goal isn't to own the jet, but to access the global transportation network it represents. Chartering is the first step away from the ego of ownership and toward the logic of efficiency. But it's only the beginning. Number 4, the next level of access. The prepaid convenience. As Ethan digs deeper, he discovers the next tier of private aviation, the jet card. If chartering is like hailing an Uber, a jet card is like buying a prepaid Metro card for a subway system made of sky. A jet card program lets you pre-purchase a set number of flight hours, typically 25, on a specific category of aircraft. For example, you can buy a 25-hour card for a light jet, a mid-sized jet, or a heavy jet. A 25-hour card on a light jet can cost between $150,000 and $250,000. The main advantage here is consistency and availability. You're guaranteed an aircraft with just a few hours' notice, and you get a locked-in hourly rate. This eliminates the price volatility of the charter market. You know exactly what your flight will cost per hour, making your budget far more predictable. Companies like NetJets, FlexJet, and SentientJet are giants in this space. Their programs offer a seamless experience with a single point of contact and the assurance of standardized safety and service protocols. It's the perfect solution for someone flying between 25 and 100 hours a year, who values consistency above all else. They get the feel of ownership, the reliability and quality, without the management headaches. Of course, this convenience comes at a premium. Jet card hourly rates are typically higher than the average charter rate because you're paying for that guarantee of availability. You're also making a significant upfront payment, which is essentially an interest-free loan to the jet card company. Still, for a busy executive, the value is immense. Time is their most precious commodity, and a jet card saves them from sourcing and negotiating a charter for every single trip. Ethan is now seeing the second layer of the secret. The wealthy will pay a premium not for the asset itself, but for the predictable and frictionless control of their time. This leads him to the most sophisticated model of all. Number 5, the smart share, fractional ownership. This is where the world of private aviation finance gets truly elegant. This is the model that revolutionized the industry. It's called fractional ownership, and it's the financial equivalent of having your cake and eating it too. Imagine you want a vacation home in Aspen, but you only plan to use it for 4 weeks a year. Does it make sense to buy the entire multi-million-dollar home and pay for its upkeep year-round? Of course not. It makes more sense to co-own it. That's the exact logic behind fractional ownership. Instead of buying a whole jet, you buy a share of it. A typical 1/16 share entitles you to 50 hours of flight time per year. You pay an initial acquisition cost for that share, which for a light or mid-sized jet could be anywhere from $500,000 to over $1.5 million. Then you pay a fixed monthly management fee to cover costs like crew and insurance, which might be $8,000 to $25,000 a month. Finally, you pay an hourly fee for the time you're actually in the air, which covers fuel and maintenance. The pioneer and undisputed king of this model is NetJets, a company owned by none other than Warren Buffett's Berkshire Hathaway. And the story of how Buffett came to own NetJets is the perfect illustration of this entire concept. For decades, Buffett publicly railed against corporate jets, seeing them as a symbol of executive excess. When he finally caved and bought one for his company in 1989, he famously named it the Indefensible. He felt he couldn't justify the expense. But then, he started using it. He realized the incredible power it gave him, the ability to be in multiple cities in a single day, to make deals that wouldn't have been possible otherwise. He soon renamed the jet the Indispensable. His thinking had evolved. The jet wasn't a luxury, it was a tool. Shortly after, he became a NetJets customer himself. He saw the brilliance of the model. It gives you all the benefits of ownership, guaranteed access, tax advantages, and a stake in an asset, but at a fraction of the cost and with none of the management responsibilities. In 1998, in the ultimate conversion from critic to believer, Berkshire Hathaway bought NetJets for $725 million. Fractional ownership is the ideal solution for those who fly between 100 and 400 hours a year. Enough to justify a significant investment, but not enough to warrant the burden of whole aircraft ownership. It's the ultimate hybrid model, a masterclass in financial efficiency. Ethan's mind is blown. He started with a simple picture of a billionaire buying a jet and has now uncovered a multi-layered world of charter, jet cards, and fractional ownership. Each layer is designed to maximize flexibility and minimize financial drag. If you're finding these financial secrets as fascinating as Ethan does, make sure you subscribe, because the next layer of the secret goes even deeper.
Number 6, the deeper secret. It's not even in their name. Just as Ethan thinks he's cracked the code, he stumbles upon an even more profound secret. Even when the ultra-wealthy do own an aircraft outright, they often don't personally own it. The jet isn't registered to John Smith. It's registered to Skyward Holdings, LLC. This introduces Ethan to the world of legal structures and asset protection. The wealthy use entities like limited liability companies, LLCs, to create a legal barrier or a corporate veil between their personal assets and a high-risk asset like a jet. An LLC is a separate legal entity from its owners. This means if something goes catastrophically wrong, say, a lawsuit from an accident, the claim is against the assets of the LLC, not the personal wealth of the owner. The LLC might own the jet and a bank account to operate it, and that's where the liability stops. Their homes, investments, and other businesses are shielded. And this isn't some shady trick to hide money. It's about intelligently managing risk. It's a fundamental strategy for wealth preservation. The goal is to compartmentalize risk so that a problem in one area doesn't sink the entire ship. The wealthy use separate LLCs for different assets, one for a rental property portfolio, another for a business venture, and another for an aircraft. It's like putting each valuable egg in its own reinforced carton. Furthermore, placing an aircraft in a business entity can open the door to strategic tax considerations. If the jet is used for legitimate business purposes, its operating expenses and depreciation can often be deducted, reducing the overall tax burden of the enterprise. This doesn't make the jet free, but it means the purchase is structured as a sophisticated financial decision, with the tax implications planned to be as efficient as possible. This is a level of financial thinking that is completely foreign to most people. The average person buys a car in their own name. The wealthy person buys a jet through a dedicated corporate structure designed for liability protection and tax efficiency. This is the crucial difference between owning an object and deploying an asset. 7. The Masterclass. Thinking like the ultra-wealthy. Ethan has now seen the how, the complex web of chartered jet cards, fractional ownership, and LLCs. But the final and most important piece of the puzzle is the why. It's the underlying mindset that drives all of these decisions. He's realizing that middle-class thinking and wealthy thinking operate on two completely different wavelengths. The middle-class person asks, "If I get rich, what can I buy?" The wealthy person asks, "If I deploy capital, what is the most efficient way to achieve my objective?" This philosophical shift is built on a few core principles.
The first is opportunity cost. This is one of the most important concepts in finance. When you spend $1 on one thing, you're giving up the chance for that dollar to do something else. When Ethan imagined buying a $75 million jet, he saw the jet. The wealthy person sees the $75 million. They can't invest in their business, in the stock market, or in a real estate deal that could generate a 10% annual return. That's $7.5 million in potential earnings lost every single year. A fractional share might cost a few million upfront, freeing up the other $70+ million to be deployed in cash flow producing assets. The wealthy don't see assets as status symbols. They see them as tools, and they are relentlessly focused on making sure every dollar is working for them. The second principle is valuing time and flexibility above all else. All of these access models, charter, cards, fractional, are designed to solve a logistical problem: how to be in the right place at the right time with minimum friction. The wealthy understand that time is the only truly finite resource. They will happily pay a premium for a system that saves them time and reduces cognitive load. They don't want to spend their days managing pilots and reviewing maintenance logs. They want to outsource that complexity so they can focus on what they do best: building their businesses and managing their empires. They aren't buying a jet, they are buying time. The third principle is control over ownership. The average person equates ownership with control. Because I own it, I can do what I want with it. The ultra-wealthy see it differently. They know that direct ownership of a complex asset like a jet can mean the asset ends up owning you. The financial obligations, the management headaches, the legal risks, they all exert control over your life. The savvy investor seeks to have all the control, the ability to fly anywhere, anytime, on a safe, reliable aircraft with as little of the burden of ownership as possible. They want the upside of the asset without the downside. Let's return to Ethan. The picture in his head has changed completely. The old image of a billionaire writing a check for a jet has been replaced by a much more complex and fascinating reality. He now sees a system, a sophisticated ecosystem of financial and legal tools designed to optimize for efficiency, flexibility, and control. He understands that the world's most successful people don't think in terms of buying things. They think in terms of building systems. The private jet isn't the prize. The prize is the time, the efficiency, and the opportunity that private aviation unlocks. And the smartest way to secure that prize is rarely through simple, outright ownership. Ethan now understands. For the ultra-wealthy, true power isn't owning assets that can end up owning you. It's about controlling them. It's about understanding that the ultimate luxury isn't a gleaming piece of machinery. It's freedom. Freedom from hassle, freedom from risk, and the freedom to put your time and your capital to their highest and best use. So the next time you see a billionaire stepping off a private jet, remember Ethan's journey. The real story isn't the plane itself. It's the invisible financial architecture that put it there. What other rich myths do you think people get wrong? Let us know in the comments below.